is Michelle McLaren, and I welcome you to the ABCs of Health Insurance. I'm a licensed health insurance agent in the state of Texas, as well as being a licensed health insurance counselor. I own my own agency, Just the Facts Insurance Agency, and I'm here to help explain the confusion that is health insurance, especially for individuals. Insurance is evil. We're going to turn evil into easy with answers. Today's letter is O. O is for open enrollment. Most people are used to there being an open enrollment period for a job-based health insurance plan. You get a few weeks to review the plan options from your HR department, or maybe just opt in this one plan or not, and you might ask the HR a couple questions and you choose a plan and you have it for the next year. But for individuals, they could traditionally sign up for plans at any time. With the Affordable Care Act, all qualified major medical plans have a short open enrollment period. For 2018, it was November 1st through December 15th, and it's the same for 2019 plans. So if you're outside this open enrollment period, you have to have a life change that causes you to lose coverage for you to get a special enrollment period, or SEP, for a new plan. Some of these special enrollment periods are changing jobs, getting married, having a baby, even if you adopt, giving birth or through adoption, moving to a new zip code where your plans change. These can all help qualify you for a special enrollment period, but you have to be careful. Just changing jobs or getting a new job, if that didn't cause you to lose health insurance, that's not a special enrollment period. So if you were going without coverage and then you get a new job, not a special enrollment period. I already had individual coverage and changed jobs, now you want to buy a better one, not a special enrollment period. If you have a short-term medical plan and it ends, not a special enrollment period. Even having a baby has its limits because the baby and the mother may qualify for a special enrollment period, but not the rest of the family. Now, plans that do not cover all the essential services and meet the rules of the Affordable Care Act can still be signed up at any time of the year. This is short-term medical plans, indemnity plans, health share plans, all of those. And just have to be careful because, again, they don't meet all the rules of the Affordable Care Act, so not going to cover pre-existing conditions and that sort of thing. Now, this may seem really restrictive and unfair that suddenly these plans are only available if you sign up during these 6 weeks. Used to be 12. I'd kind of like it to go back to 12, but it's 6. The insurers have to issue you a policy no matter what your health condition is. That's that pre-existing condition coverage in the Affordable Care Act. So you could be pregnant and about to give birth, in the middle of expensive cancer treatments, or, having knee surgery that you put off for years until you got this coverage. Now that they have to pay for it, it's only more fair to the insurance companies that you are planning for those sort of things. If you could just get insurance whenever you wanted, no matter what your health condition is, that'd be like getting into an auto accident and then getting auto insurance after that and expecting the insurance company to pay. No one expects that from the auto insurance companies, and it's not really fair to expect that from the health insurance companies either. But the way the Affordable Care Act is now, we do expect that, so you have this limited time to sign up. Basically saying, hey, you might not be sick now, but you better be prepared. And if you are sick now, you better sign up now. You got to remember that insurance is a gamble. Everybody says they're not gamblers, but hey, if you buy insurance, it's a gamble. You're paying a smaller amount of money on a regular basis to ensure that if something bad happens, you have someone to help you pay to fix the bad thing. So the insurance companies need a whole lot of people to chip in their little amount, covering expenses over the years, and then they hope that they don't have to pay out so much. Truth is the odds are in favor of the insurance company. Less than 15% of medical expenses are over $30,000. Most of them are under $5,000. So you might break a leg or, need some shots, and that's not going to cost the insurance company a lot of money. And then you feel like you're gambling poorly because you've been paying these expensive premiums. But what if the bad thing happens? What if you have quadruple bypass surgery, or major cancer, or like a recent client of mine, $5 million in preemie baby expenses for a pair of twins? That's when you need to make sure you had the right gamble going on. So you need to choose what sort of chance you're going to take. The limits that were set by the Affordable Care Act, the max out of pockets, the no more limits on how much the insurance companies will have to pay, those are designed to lower your bankruptcy risk. But we have to take the responsibility to sign up for insurance, be a part of that risk pool. If you don't want to be forced to be in the pool, that's fine. But are you prepared that when the bad thing happens, not to get any help? Right now, if you go to the emergency room and your life is in danger, they're going to treat you. If we don't make that part of the system, is that right? One of the ways to get the insurance rates to drop is to get more people on the insurance plans altogether, especially the healthy people who don't need it right away. If you are in an enrollment period or a special enrollment period, one thing you might want to remember is you need to enroll by the 15th of the month to have insurance for your next month. All of this stuff put together is complicated, and everybody has different opinions. I'd love to hear yours. Education is important. That's why I created Just the Facts Insurance Agency. It's just the facts you need to protect those you love.